Good afternoon, everyone, and welcome to today's webinar. We are continuing the Nordic Property Insights series, and we are looking today at the logistics megatrend. My name is Angus Ford, and I am a real estate partner in the London office of the global law firm Eversheds Sutherland. I'm also the head of our global logistics sector group, and I work closely with my Nordic colleagues. So I was delighted when Tord Svensson in our Swedish office asked me if I could host this webinar today. At Eversheds Sutherland, we act for investors, institutions, developers, funders and occupiers globally, and our Stockholm office is currently involved in 3 logistics projects in excess of 165,000 square metres. I am pleased to be supported today by Fraga Lu, who have put this webinar together. And I would also like to say thank you to our panel of JLL, Catena, AIP Asset Management and Verdian for joining us. I'm going to give an overview of what is currently happening in the UK market, followed by the inside view from JLL and Catena, and then an outside view panel Q&A with AIP Asset Management and Verdian. We are recording this webinar whilst it is also live on YouTube. And if you want to ask any questions, then please use the Teams chat function. So, turning to the UK market and the current statistics, the logistics sector, as we all know, is vital to everyone's day-to-day lives. Savills have produced recently some statistics in their latest update, which I have to say make for some pretty impressive reading. It has been a record-breaking year in 2020, reducing vacancy rates to 5.7%. Online retail activity continues to surge, and in early December 2020 was 51% higher than compared to December 2019. 2020 has broken all previous records. New leases signed have been signed for 50.1 million square feet, that's 50 million square feet of warehouse space. This is 12.7 million square feet more than the previous 2016 record. This was achieved in 165 separate transactions. 25% of the space was leased to Amazon. There has been a surge in units over 500,000 square feet, in excess of 25 deals recorded, and this looks set to continue with the current requirements in the market for 2021. I mean, I remember when I started out in 2004 acting for Tesco on their industrial portfolio strategy, and 500,000 square feet wasn't even a comparable back then. Speculative take-up has hit an all-time high of 10.8 million square feet, as did take-up from the third-party logistic providers, which is close to 10 million square feet. Total investment has hit £4.7 billion, which is up from £500 million over the previous 2014 record. Supply has fallen by 3.8 million square feet to 32 million square feet. Grade A is 41% of the total supply, which is down from 55% 12 months ago. So as you can see, there are some pretty impressive statistics there about what's going on in the market as it stands at the moment. I thought I'd just turn to some of the sort of trends that we're seeing in the UK. We are seeing more rail-led developments, which are being classified as nationally significant infrastructure projects. Try saying that quickly. We call them NSIPs. And this allows a more simplified approach to our complex UK planning process by use of what is called the Development Consent Order. That is simplifying some of the aspects, but as people who are experienced in the UK planning situation, it's still not an easy place to play. It's interesting, I was speaking to one of my American colleagues about the fact that we're seeing more rail-led development, and actually in the US they're more interested in decent-sized truck parking areas in order for them to progress. So obviously they're looking at it from more of a road angle than the rail angle. Other trends that we are seeing is one that we all call sheds and beds, as we like to call it, and this is a solution to the sort of city and urban requirements and the demand for logistics space. So we are now looking at trying to produce sort of multi-storey mixed-use schemes which will have this logistics element in it to help with that last mile type delivery. Another sort of new expression that is being more and more used is the expression rural logistics. A lot of what's happened with the pandemic, people working from home, we now have a requirement of 300,000 new homes in rural areas, and this is going to require logistics support. And obviously with us working more from home, but I think that necessarily won't be as drastic as everyone expects. There is still this requirement to service that situation. We're seeing clients diversifying more into the logistics sector. We're seeing investors moving from their principal investments and seeking out logistics opportunities, whether that's to balance their portfolio or whether they feel that they should really be getting in on this incredibly hot logistics market. Also, given some of the issues that we're having around retail, we're seeing our clients repurposing their existing real estate assets into logistics in storage, especially in relation to the last mile urban locations. So what's next for logistics and where are we going in the UK? Again, I'll turn to Savills. They recorded 112 million square feet of take-up across the entire market in Q4 2020, which is the highest ever recorded and really is an incredible figure. Q1 2021 is already looking strong, so will this continue? Obviously, I hope that it does. It makes a lot of the work that I do day to day, and I genuinely believe that it will. Perhaps not to this incredible figures that we've just been looking at, but some of the sort of themes again that I think will influence the market. Online shopping rises are likely to continue. Internet sales accounted for 31.3% of total sales in December 2020, which, as I said before, is up 51% on December 2019. No one sees this changing anytime soon. I certainly don't, and that is definitely seen to be continuing. I'm afraid I'm going to have to mention the Brexit word, so apologies for that, but that does have an impact on what is happening. It has created sort of barriers to trade rather than removing them. Companies will look to restructure their supply chains, and I think for each company that is relocating to mainland Europe, there is also evidence of those people coming back the other way into the UK. I think one of the changes we're seeing is potentially that they are likely to be based more near the UK ports and not so much in our dominant Midlands region where a lot of the logistics sector operates. The other one that is obviously a key factor at the moment and very much in the press is obviously electric vehicles are a requirement now, and that's going to have a big impact with the predicted huge demand for the electric battery manufacturing. You only have to look at some of these Tesla buildings in America to see how big they are. These buildings require millions of square feet. As we also know, online grocery retail is surging, and the main players continue to adjust to the increased adoption of online shopping. Data centres continue to thrive, and with no likely diminishing of internet usage, these acquisitions will continue to grow. Just to cover one point, which obviously not so much on a sustained position, I hope, but the rollout of temperature-controlled COVID vaccines has also given the logistics sector a much higher profile in the mainstream and public eye, which I do think will influence policymakers for years to come. So it's a positive benefit for the logistics market. Just finally, given that I am a lawyer and this is what I do, I did think I'd pick up a few legal points. Apologies for that, but I'll try and make it short and sweet. I thought it would be useful just to pick out a few things that we've been experiencing on some of the transactions we've been involved with. Alienation provisions, assignment, underletting, group sharing in leases continue to be a hot topic of negotiation. In particular, I'm talking about sharing occupation with group companies or with third-party logistics providers. How do we do that in a way that you are sometimes handing over control to these 3PLs or another group company, but still keeping the sort of covenant that is in place and not putting subleases, as sometimes the occupiers don't want that. Another point on that, subletting these actually significantly large buildings into numerous parts, that can become a bit of an issue sometimes in terms of how that is done, But when these buildings are this size, we have to sort of future-proof them when the leases tend to be quite long, given the massive sort of financial outlay at the beginning. The other point, which I think is now becoming a bit more accepted as normal, restrictions on the landlord entering the premises during the sort of Christmas period, November to January. Obviously a very important part of the time for a lot of the occupiers, and we're calling that the Santa Claus these days, and does seem to be more accepted into the lease. Rent reviews, as I mentioned earlier, sort of comparables are very difficult in this market, although we are seeing an increase in the number of these sort of size of buildings. You know, some of these are in excess of 2 million square feet. The occupiers like to link their rent to the retail prices index, so they can see what they're likely to have to pay for rent in the future, and that does appear to be the norm. Very rarely these days do I see myself sort of negotiating open market rent review clauses. So it tends to be an RPI linked clause with collars and caps for protection for the landlord and the tenant. Access and rights of way, very important, absolutely crucial. You know, the occupiers need 24/7 access to their buildings and their usage. So the sort of ability to use the road is very important. Further, we sort of are seeing this ability for occupiers to step in and carry out roadworks if necessary, where the landlord or manco just can't move fast enough and they really just have to protect the business that they're doing. Other items, just of note, power upgrades. These can be difficult to get and take a long time, so it's worth thinking about those before you're sort of setting up this particular building, to give yourself time to get that in place. And then, of course, the other one, which is quite an interesting topic at the moment and is evolving as we see it, automation of these buildings. These are multi-level mezzanine floors, automated with conveyor belts and robots. This causes all sorts of construction, design, installation, data usage, cyber threats, and all these issues are plenty are coming across my desk in these transactions at the moment. So that was a quick canter through the sort of where we're at with the legal position at the moment. Thank you for listening to that. In a few moments after a short video, you will hear from Liana Grimslet from JLL, who will provide a logistics overview in the Nordics.
Logistics hubs in the Nordics, very briefly on the investor market, and then I will sum up with the outlook and hand over to Jörgen, who will probably have the answer on that. But firstly, I think it's a lot of people on this call who I haven't yet had the pleasure to meet. So I just want to have a couple of words about myself. I've been with JLL for a while. And I do enjoy it, at least the latest 5 years, what I've spent with logistics, first in Sweden and then Nordics, and now finally Baltics. This picture shows all my fellow colleagues around Europe. We are around 65 capital markets, industrial logistics specialists. We had a turnover of 21%, and a lot of deals going on there. So what about the Nordics then? I think I need to look at my own presentation here. Sorry for that. I don't know if people kind of remind themselves about Q2 last year, at least not we that are working in logistics. It was a little bit, suddenly everything slowed down due to the pandemic. But now looking at the mirror, we still have very stable rent levels in the market and no declining. We also see we have strong take-up in several markets, very much boosted by the e-commerce. We have new supply, strong new supply coming to the market that came to the market during 2020, and the estimations for 2021, which is kind of fixed because it doesn't take that long time to build logistics. It's actually increasing further. Then if we relate to the rest of Europe, I would say that in Europe, they're building 1.4 million square meter of logistics space last year. And that's actually 1/4 of the total stock in Sweden. So it is small volumes coming to the market. The estimate for this year is 800,000 square meters in Sweden. We are primarily doing build-to-suit projects in this market. We have some speculative constructions, primarily found in Stockholm and Gothenburg, I would say. We have in other locations as well. Yield compression in all markets. Turnover during 2019 to 2020 was all-time high for us. We actually were top 3 last year in increase, followed by Germany and UK. And it was mainly driven by portfolio transactions and last year also a couple of single asset large transactions, and I will mention them going further. So we are suddenly here in Sweden, and I can just imagine it's the same around Europe. We're kind of entering the cozy living room within real estate with this 25 to 30% of the turnover. But I do think we should have in mind that a couple of years ago we were so happy if we had 10%. So where are the key hubs in the Nordics? Let me see here. Yep. Of course, being close to the larger consumer markets in Copenhagen, Oslo, Helsinki, and Stockholm is of course super important. That's where you deliver. But it's also a couple of other key locations, and I would just mention them briefly. And we could also see, and maybe Jörgen, you can have the opportunity to comment that a little bit further, but we can also see some niches or branded on these locations. We have Eskilstuna, for example, which is super strong on e-commerce. It's a very active municipality. Land prices are realistic, and the rent levels compared to Stockholm is very competitive. That's where we have Coop, for example, just establishing a large or going to build a large grocery warehouse. We have Örebro, a hub for the mid-Sweden, Mälardalen. We have Norrköping as well, south of Stockholm. I would say that's together with Linköping is also an upcoming area for logistics. Sports is quite popular there. We have like Stadium, XSL, and so on. Jönköping for sure. It's a center point for the whole of Nordics with different units, and it's also fast train from Gothenburg Harbor going up to Jönköping. Borås and Gothenburg is often mentioned as the same region. I would say they have a little bit different characteristics. Borås is maybe 2/3 of the rent levels if you compare to Gothenburg. It's quite close, very active municipality as well. If you go there, you will find fabrics, clothing, strong tradition within that. Good ground conditions because they have the mountain and the rock there if you compare to Gothenburg where you have huge amount of soil. But Gothenburg is also where you have the harbor and Volvo cars. So a lot of occupiers is actually delivering to Volvo cars or shipping out from Volvo cars. The south part of Sweden, I would say, is super popular in everyone's eyes, very much thanks to infrastructure. Helsingborg is in the center court between the two main motorways. There you can see a lot of food, flowers, fruits, and stuff like that. And Malmö, thanks to the bridge and Copenhagen. Again, just very short on the logistics hubs. It's a lot of technique here, I think. So on the investor market then, I will just mention a few of the largest transactions. And as I said, 2019 and 2020 were all-time high records, very much driven by the interest in Sweden. It was a lot of new entries in the market. Blackstone made the first large transaction during 2019, and DBS, Morgan Stanley has just followed. But it's small volumes if we compare to other markets in Europe. Don't forget that. Just touching briefly on the examples here, it's a Nordic portfolio spread over all the Nordic countries, bought in two transactions, 700 million euros on that. Morgan Stanley entered the Swedish market, buying a really nice prime logistics portfolio in southwest Sweden for 220 million euro approximately. We also saw a lot of urban logistics, or if we call it last mile transactions, where Blackstone and Castellum agreed around 1.8 billion euro. MREP is very active both in development and selling, but also acquiring. It's C stands for Coop Logistics. So this is a giant distribution center just close to Gardermoen in Oslo. All these transactions, I won't go into yield details, but they're very, very low. DVS on a forward transaction with Coop in Eskilstuna on their new development, also together with another transaction in Jönköping with where they bought Elgiganten's distribution center, just entered the market as well. We have seen Barings being very, very active in the market. And I would say also that's why I brought this transaction, because this was in the middle of Q2. It was PostNord, one of the largest 3PL logistic companies here. They were selling in a sale and lease back. And it was a moment during Q2 where a lot of people actually talked about COVID rebates and so on. But when this one came at a good level, I would say that's when business just continued in our market. So what would happen during 2021 then? And maybe a little bit beyond as well. We do think market fundamental looks robust. We see increasing number of investors in our market, and I'm sure we will see additional new entries to the Nordics during 2021 as well. Not only sector specialists like Michael and Verdion, but also, if we call them generalists, who has raised a lot of money, will do new entries. We had Bent Agreement was just released yesterday in Malmö Harbor. Further yield compression in all markets as well. We think we lag around 9-12 months behind the core markets in Europe. I also want to touch a little bit on rental growth versus pressure on rent levels. As we have this super high prices, I get a lot of questions on rental growth, and that could be like, you do have rental growth in Sweden, right, Lena? And I think we need to look at that question for different locations. Of course, we will see rental growth in Stockholm, for example, especially when this urban logistics is getting more and more popular, and landlords is getting more and more active on raising the rents because they need to, because they have bought the assets so expensive. But we also see a pressure on rent levels on the more secondary locations, but it's super high competition on getting the tenants, because in our market it's quite usual to first secure the tenant, then you secure the land, and then you construct. And when yields are going down, rent levels will go down. I'm not saying it will go down, but I think a lot of developers is feeling a high pressure right now on rent levels in secondary locations. We also see cost of debt is super critical with these low yields. The ones that can secure good financing are the winners. And I brought up some mega trends before I hand over to you, Jürgen, or I hand over to you first, Angus. And of course, e-commerce will continue to be a large driver of demand. We also think we will see a rising demand for urban logistics solutions, and sustainability in our eyes has just started. It will be more and more focus on that. Over to you, Angus.
Thank you, Leona. That was really good. Just a couple of questions I wouldn't mind asking you off the back of what you've been saying. I did think it was very interesting, some of the names that have come into the market for you, and I just wondered what your view was on the sort of massive influx of international capital that's coming into the Nordic logistics market.
I'm sorry, you need to repeat. I didn't get the question, Angus.
I was interested in the, given some of the names that you mentioned investing into the logistics market in the Nordics, what you thought about this sort of influx of capital that's coming in?
In the long run, of course, we are super happy with the more people that want to invest in Sweden, the better it is. Definitely, but depending on if you're a long-term holder or if you're a developer, of course, in the short term, there are a competition in the market that is quite strong, I would say, definitely.
And just sort of leading on from that, because I always find it very fascinating, but what are the sort of, how easy is it for new investors and developers to come into this market in the Nordics?
I think when I look at our international friends and how they choose to enter the market, it's a little bit different. But I would say the ones who has actually succeeded are the ones who decide to have management on the ground in Sweden, to set up a team with 1, 2, 3 women or men or whatever you choose to hire, because it is a small market, and that's not only for logistics, I would say, and you need to be. It's COVID now, so you can't be around the tables in the seminars and so on. But I think you need to be in the market to be able to succeed properly.
Thank you. Okay, there'll just be another short video, and then I will hand over to Jürgen Eriksson of Catena. Thank you, Leona.
Thank you.
Okay, thank you. I will now pass over to Jürgen Eriksson of Catena, who is going to discuss again the inside view on the Nordics. So over to you, Jürgen. How are you doing?
Hi, Angus. Thank you. I'm good. And hello, everybody. Welcome to this session with Catena. My name is Jürgen Eriksson, and I'm the CEO of Catena since the 1st of November last year. And I have been in Catena for about 5 years. Catena is the leading property company in logistics in the Scandinavia. See if I have the slides here. Is coming, yes. So the contents for today will be, first of all, Catena in brief, and then the market, our view of it today, and then we will have some talk about the logistic properties of tomorrow. I'll go back here. It says some technical issues. So here we are. Our vision is to link the Scandinavia's cargo flow, and as I said, we are an owner, operator, and developer of the logistic real estates. We are located in Sweden and Denmark, serving the metropolitan regions of Scandinavia. And as Lena told you before, there's a lot around the Logistic famous triangle in Sweden between Gothenburg, Stockholm and Malmö. We have reliable and long-standing relationships with our broad group of customers, and I will come back to that later. As Lena mentioned, to have people on ground, that's very good for us. We have delivered fundamental, strong and durable cash flow, and we will do it again in the future. Here are some figures from our report for 2020. We have a lettable area of around 1.9 million square meters, a property value about 18.6 billion SEK, a very high letting ratio of 96.2%, and a loan to value that is close to 50%. We are listed on the Nasdaq Stockholm market, and the market cap, as you can see here, is 14.6 billion, and as we speak, I think it's around 15 billion SEK. Interesting about Catena is that we are a rather small organization with just 46 employees that make us very effectively. We work very fast and tight with our tenants, and we can respond to any kind of issues very fast, no matter if it's a day-to-day life question or it's a huge investment. We are the distance from the top to the bottom in Catena is very small, and I think that's a great advantage for us. Here's a picture of some of our customers included on our customer portfolio. We are very proud of our customers, and we have a long relationship with them. And as you can see quickly, a great deal of our customers are strongly linked to e-commerce. Many customers are related also to the food and beverage business, which we feel very safe about it, since the segment is not that sensitive to any fluctuations in the economy. And it's also worth to mention that two of our biggest customers, DHL and PostNord, are owned by the government in Sweden, Denmark and Germany, and that's very good from a risk perspective. Yeah, and of course, when I said that the customers are strongly linked to the e-commerce, that also means that they have had a real boost the latest year due to the pandemic. So we feel very safe with our business for the moment. The market today, our view, e-commerce is about 15% of retail sales, and we are sure that there will be more to come, and we expect strong demand from variety of segments, especially groceries and cold storage. We can see that the facilities in Scandinavia concerning cold storages, they are quite outdated, and there need to be more modern and energy effectively storages produced in the coming year. I think also that you have heard about the ice age is coming in the logistics sector. So I think that we can present some ice age projects. We can also see that the third-party providers are driving for more spaces in the near future, and that's of course related to the e-commerce once again. We can also see a trend that the industry enterprises are seeking to reshoring their warehouses, and they in some cases want to have them closer to their domestic area in Scandinavia. So they become the big warehouses and have them closer to the home market, so to speak. Yeah, once again, COVID-19 is accelerating the e-commerce, and in Sweden, the proportion of the Swedish population who e-shopped in December was 85%. It's crazy, and the e-commerce in Sweden grew by 50% in December, related compared with the same month in 2019. So we are really talking about a mega trend. And if we are talking to the segment with grocery shopping online, we can see that we are at least 3 years ahead compared to a forecast that was made before the pandemic. And as I said before, this drives the demand for more temperated facilities in the future. Some words about the logistic properties of tomorrow. Goods and cargoes will for sure flows. They will remain in Scandinavia. A long-term need for efficient and smart logistic networks in the Nordic countries. And the mega trends such as urbanization and global trade and digitalization and of course the online shopping again, it will spotlight logistics. And we need to secure a supply of goods that is essential for our society more than ever in an uncertain times. Then we need to know when the goods will arrive at our home. Good to mention is also that the Nordic countries comprise the 12th largest economy in the world. So it's a rather big market, an interesting market. In the future, we need to see what can we do to be more creative about constructing new buildings. We can for sure see that there will be a lack of land in the most interesting locations. We can see if there are any existing properties that we can be converted or change function, or we can look into if we can explore some more building rights, and if we can maximize all the surfaces. We also need to build on the height, and maybe we can present the high bay warehouses in the south of Sweden, like on the picture here, in the future. We can also see that if we can develop logistic clusters that's more efficient and more sustainable when different actors can collaborate with, for example, a terminal between a warehouse and so on. We also see that the sustainable is the norm in the future, and it's very the strategic location is very crucial, and then we can do the transportations as sure as it's possible. We are looking into certificate all our buildings, which means that there's guaranteeing a high quality in relations to the tenants and their employees. It also guarantees that they are very energy efficient. We are very much keen to look into if we can letting our tenants to have access to fossil-free fuels in the future close to our facilities. It could be related linked to solar panels on our roof. And as I started with that, we have almost 2 million square meters lettable area. That means that we have also about 2 million square meters roof that we can having solar panels on. We also see that green financing will be the new normal in the future. At Catena, we are. This is our operation, and as Lena talked about that before, that there is a lot of investors seeking for investments in the Scandinavian. We can some parts say that it's like the invisible capital wants to invest in logistics, but we can see it as more as an operation, and we need to have a very tight dialogue with our tenants, and that's crucial for us in the future. And we can create value between different players in logistic chain to create smart and sustainable solution. It also creates value between property owner and tenant for quality and continuity. We also need to have an ongoing dialogue with the society and authorities, and that's necessary. So maybe we can have some getting more land to produce on in the future. Thank you. That was all for me. Over to Angus.
Thank you, Jürgen. That was really interesting. I was just going to ask you a few questions before we sort of hand over and go on to the panel and Q&A for the outside view. Just before I do that, everyone, if you can remember, there is a chat function on the YouTube channel. If you want to ask any questions of the panel, please put those in there and I can relay them. I have some already, but yeah, if we can keep those coming in, that would be great. But yes, Jürgen, I think the same sort of question I asked Liana. Obviously, Catena very much in the local market. How do you feel about this sort of the international capital that's flowing into the Nordics at the moment from your point of view?
It's a very tough competition out there, but I mean that's the one of the play rules, and I think that we can offer the market a great land bank. Of course, there could be some lack in the processes, having new zoning plans, but once we have the zoning plans approval, we can offer the market some really good and interesting locations close to the highways and close to the metropolitans. So that will be our advantage in the game. But of course, so much capital is coming into the Scandinavian market. There will be a yield compression, and we are not there right now to compete with the very low yields. We try to do some deals in other ways.
Okay, thank you. And for Catena's growth strategy going forward, would you consider any sort of portfolio deals? Is that interesting for investors looking in as well?
Absolutely. I mean, we presented a quite big deal for us the other month when we acquired a portfolio in Denmark, and a part of the purchase was to having a new Catena paper in the market. So it was a win-win. The seller wanted to be in the logistic market, but they didn't want to operate the facilities anymore. So that was a great deal for us.
That does sound like a good one. And then just finally, we haven't really mentioned too much about Finland and Norway markets. I just wondered what your sort of view was on those countries.
Yeah, we as we are very much in Sweden, and we started to look outside the country. We started with Denmark, since it's very interesting to link down to Germany and a huge market in the region of Hamburg. So for the moment, we are looking at that direction, but who knows in the future.
Okay, brilliant. Well, thank you very much, Jürgen. We're going to have a short video now, and then I will do the Q&A session with William and Mike. Okay, well, thanks everyone. Now moving to the last part of our webinar today, which is what we're calling the outside view. So it's very interesting to hear from Jürgen and Liana before on the sort of the inside view in the Nordics, but to get an outside view from William Harris from AIP Asset Management and Mike Hughes from Verdian. I'm going to start first with William. Tell us about AIP, please, and what your interest in the Nordics is.
Sure, yeah. So yeah, thanks, and thanks everyone for joining today. So AIP, basically Korean investors started investing globally about 10 years ago. AIP's been there for pretty much every step of the way, and so we've developed together with our clients. And so as you can see in the slides, we also have expanded into different markets and had different subsidiaries. So we're now in Singapore, we're in Sydney, we're in New York City, and we're also planning an office in Europe. So and then so right below that, there's also the Nordic transactions that we've been a part of. So far we've been in office, which, as you'll see in a second, is the most familiar asset class for Korean investors. And so those have been Usually pretty large transactions. Korean investors typically target assets over 100 million. And then so if you look over to the right, you'll see our allocation. As you can see, we're pretty heavily allocated into Europe, and we've been building our position into Europe over the last kind of 2 to 3 years, along with many other Korean investors. And then below that is our leadership. That's Danny Kim, our CEO. He's got over 10 billion euros of deal experience, and so he's really one of the most recognized investors here in Korea. So next slide. Yeah, and so going forward, I thought it'd be good just to give a high-level kind of overview of what Korean investors, like kind of their situation. And so if you look at this first chart here, this is the overall invested capital by Korean investors as of last December from the financial authorities in Korea. There's 380 billion euros invested overseas. As you can see, 53% of it is in office. So it's quite a large allocation, especially relative to logistics. So as you can see, logistics there highlighted at 5.3 or 5.5%. So this is a bit different than some of our peers as we're starting to compete more globally in our allocation. So you can imagine that there's quite a lot of pressure on Korean investors to get more into logistics. So that's one of the driving forces for us to do more investments in the sector going forward. And then just looking at AIP's strategy. So I think people will know, and they can see here at the bottom, that Korea has become more active in the logistics space in the Nordics. So there's been 3 transactions, each over 100 million euros in transaction volume. This would be really the core segment, and I think that's maybe what Korean investors are more well known for. And that's the long leases, investment grade tenants, and then high occupancy. But I think now that we're searching kind of more for yield, because Korean investors in the domestic market are getting low yields because yields are very low here. And so they're having to go abroad and try to get more return. And so we're trying to do that now through core plus strategies. So Korean investors are pretty good at taking on releasing risk and doing shorter walls and looking at the tenant story. So that's something that I think maybe most people don't know about Korean investors, which I think could be an interesting segment going forward and maybe open up some more opportunities. And then just beyond that, we can do forward funding. We have some experience doing that in the US, and we think that the Nordics, given the transparency in legal environments, we think it's also reputable. We could replicate that as well. So I think that's probably a good initial overview, and I'll pass it back over to Angus.
Thanks, William. And Mike, I mean, we know Virgin are very active in Europe, but what brings you to the Nordics, please, and give us some background to that.
Hi, Angus. Well, there are 2 things. First of all, we must work together. So that's the conversation we're going to have. I spent a week in Seoul 18 months, 2 years ago now. Met quite a few investors, but we didn't meet. And
no, we didn't.
So we were only meeting virtually. So we'll pick that up another time.
Sure.
And I was amused, Angus, when you described the mega shed as 500,000 square feet, because when I started in the industrial sector, and I've been in it most of my professional life, a mega shed was 50,000 square feet. So things have come a long way. Sorry, repeat your question, please, about the Nordics.
No, it's what's brought you to the Nordics, given your track record in Europe, and obviously we worked on iPort in Doncaster and things like that. But yeah, what's attractive to you here?
Well, we're foremost a European perspective business. I mean, founded in the UK, but we're very much a pan-European team of people. Our main operational offices in Düsseldorf. We have offices in Frankfurt, London HQ. And we have offices in Gothenburg and Copenhagen, local teams. We're very much a European perspective. We have the big iPort rail freight facility you mentioned in the UK, and that's doing incredibly well. In fact, on your comments on Brexit, we've seen volumes rise on the rail freight. We've seen demand for buildings really grow this year. So I think there has been disruption to supply chains, but I think some of that's been creative destruction. And I think out of this, you're seeing some very interesting requirements for new buildings and new supply chains, I think, which you mentioned or alluded to in terms of reconfiguring those supply chains. And that's creating real estate investment opportunity.
Yeah. No, I totally.
Where things stand with us now, we've got about an AUM of about 1.5 billion euros, mostly a product which we've created through development. And in addition, we have our own active investment management business, where we're investing in existing assets with strong value add potential through brownfield redevelopment, extension, refurbishment, etc. So we're working in every part of the logistics real estate market, from both strategic land, large park developments, speculative development, and value add working with existing brownfield land. And I think the Nordics very interesting to us and have been for a few years. But this year we really put our feet firmly planted on the ground with the Nordics team in Copenhagen and in Gothenburg, with a view to really putting our attention and focus into getting into this market and making a big impact. And many reasons for that.
No, thanks, Mike. I think just had a sort of a question on that for both of you, but a tougher one. But and you have sort of given quite a good answer there, Mike. But I'll ask this to both of you because it's coming. But do you see the Nordics as part of your core strategy, or is this just opportunistic at the moment? Maybe William, if you want to go first.
Yeah, no, I think it is part of our core strategy. I think we are looking at assets on a global basis. So we look at deals in Americas and in Asia, and then also in Europe. And so we're comparing all of them. And a big thing for us is kind of the currency. So we have currency premiums and we have hedging costs. Right now, I think we're getting about the same kind of spread when we're looking and underwriting deals, but we're getting a negative impact of about 50 basis points, give or take, when we look at U.S. deals on a cash-on-cash perspective, and we're getting about 50 basis points positive when we go into a Europe perspective. So that's usually kind of the deal breaker, and so I think that's going to be, and where interest rates are at now, it seems like it's going to be pretty sustainable, this sort of premium, which is going to motivate once COVID clears up. It's going to motivate a lot more outbound investment from Korea back into Europe.
Okay, well, that's really interesting. And Mike, I mean, obviously you just said about what you're doing in terms of what you're setting up, but yeah, if you want to.
Yeah, it's both opportunistic and a core part of our business. It's the future. The fundamentals, when we talk about the Nordics, our clear focus is on Denmark and Sweden. That's not to say we won't invest sometime in the smaller markets in Finland, and of course, there's the super economy of Norway, but Sweden and Denmark are our main focus. And why do we like the markets? Political stability, pretty much sound economic strengths of both countries, both very different, but sound economies, sustainable economies, and real opportunity through some changes in the market. E-commerce has been mentioned, and that's rather a lazy word. People talk about e-commerce and online sales. What I think is interesting is the way that the real estate is evolving into different types of strategies, different types of real estate to meet different markets. There's a big difference between B2B boxes on a motorway junction and B2C units serving urban populations, food, pharma, beverage, convenience goods. And I think one of the gaps, one of the differences that's emerging in the Nordic markets is that need for speed to market, the need for units to serve, space to serve communities and cities for convenience delivery, pharma, food, beverage, etc. And that's very much a growing trend. And there, we're looking at unit sizes which don't necessarily create themselves through build-to-suit situations. You've got to build them, and you've got to build them speculatively. You've got to offer them for rent. And so you see markets that are transitioning from typically owner occupation to of a size that can be built to suit, to now serving immediate needs. So I think where you can offer a modern product, standardized product, highest quality, sustainable, and you can deliver it speculatively in edge of urban locations, you really can meet a market that's not actually being met properly. So I think that's the gap.
Yeah, I know.
If you look at the growing urban areas around Malmö, Copenhagen, the Skåne region, And you look at the cities of Stockholm, Gothenburg, those are markets that need space to serve chimney pots, houses.
Yeah. No, it's very interesting because Liana mentioned earlier the sort of when you look at it from finding the tenant to finding the land to doing the deal. I mean, it sounds like you're actually looking at it from the other way around.
Absolutely, absolutely. So we acquire strategic land. We've just acquired with our partner Aviva a large piece of land south of Copenhagen in Solrød, where we're developing 150,000 square meters of space. Much of that will be speculatively. Much of that will be between 5,000-10,000 square meter units, which appeal to that speed to market requirement. If you work through the process, typically now, of finding land and zoning it and permitting it and building, and you work around the seasons and you work around the working practices in the Nordics, from beginning to wanting a building to delivering the finished product, it's a long, long time. And it's getting longer and more bureaucratic. So, you know, the future now is really acquiring land, going through the zoning and purposing processes and delivering the product the business wants. So we see that as a particular trend and intend to take that opportunity in the key markets in the Nordics, certainly in Sweden and Denmark.
Thank you, Mike. That is really fascinating. I think just to finish up for both of you, I'll go to William first, but how do the Nordics compare to the sort of rest of Europe and maybe the world for that matter as your investment strategy?
Yeah. I think I can just say first that it's competitive in terms of other regions, and I think that we see kind of what other people have seen, what Lena's mentioned, for example, and yourself. I think in the Nordics, kind of depending where you're at, there's kind of a few key trends. You see quite a bit of concentration into cities, so a lot of people coming from rural areas into the major cities. You see the e-commerce growth and grocery growth. And then you also see the migration of skilled labor into these countries, because these countries are great places to live. And so you see all those things converging right now. Because of COVID, you'll see more of the e-commerce growth just because of people buying more things from online in this environment. But then I think over time you'll see people start concentrating back into cities. You'll see more migration into these cities, and those will be some kind of later on trends, more latent trends that you could see. So I think just the Nordics, I mean, it's hard to compare in all the different regions that we look at, but we can say that the Nordics is very strong.
Mike, do you agree with that, presumably? Or you're on mute, Mike.
There's me trying to be considerate with a police car zooming up Cannon Street. Look, they are, William said it, great places to live. And those populations are expanding. I think Sweden's around 10 million now, but it wasn't so long ago, it was 9 million. Ditto Denmark. It's interesting. We see Denmark very much as the gateway to the Nordics, the connection with Germany, that particular E20 corridor running up Copenhagen and across through to Malmö. Very important hub for growth. Although strangely, the Swedish team disagrees and thinks Sweden's the gateway to the Nordics. So I guess, but a huge potential. You look at the Skåne region, look at Malmö, the growth that's happening there, opportunity there for investment. It's fantastic. So the fundamentals are right. Long-term investment and ownership.
Okay, thank you. I don't know what's quite happened there with our screen, so I'll hand over to Sverre Torp Fagerli. Thank you, everyone on the panel, for a great session today.
Thank you.
Thank you, and thank you all for watching. And I would like to thank our partners, University Sutherland, Katina, and JLL for supporting this. And I would like to thank our speakers, and a special thanks to you, Angus, for moderating. And last but not least, this webinar will be made available online afterwards. And stay tuned for upcoming events on the Nordic Property Insights. We will have an event in 1 month about residentials in Sweden. So follow us on YouTube, follow us on LinkedIn, and thank you.
Thank you.
Thanks, everyone.
Thanks, everyone.
Thank you. Bye.
Thank you.